Good evening, traders. Namaskar. Today we are in the evening of 2nd of November. It's a Wednesday evening. And yes, there has been a pretty wide gap since I last shared my market view. I think that was back on the 20th of October. I should update you, I was post Diwali. The very next day I was traveling. I traveled to Bangalore and Mysuru, but I was heavily under the weather and very high fever. You could probably make out from a little bit of sore throat that I still have. I'm still in the recovery mode. So it didn't go that well the last few days, but that's not about me. The market went really well in these days. The last time I discussed about the markets, we were here. And if it holds well, 17,800 will not be a problem at all. You know what, we're at 18,200. So pretty well done with higher highs, higher lows on the daily time frame, one after the other. Momentum really strong. Participation from the large caps is there. So I should congratulate the market for giving us this kind of a one-way rally. And I feel that there is a bit of a surprise element in this rally as well. We wouldn't have foreseen this happening this well. So what happened today? After four, by the way, we're looking at three screens. This is the Nifty near-month futures, weekly, daily, and 75-minute time frame. After four consecutive positive days, today was more of a let's say a day of consolidation, wherein the index decides to take a breather. The 75-minute time frame will reflect a negative classical divergence with the momentum slowing down, and this led to a bit of a corrective move towards most of the trading hours in today's trade. But having said this, is there any sign of a reversal on the daily or the weekly time frame? No. Is this correction, whatever little correction that we've had today, is enough to get us worried and think of a trend reversal? No. So I think that whatever we experienced today, that is this small little move on the downside, is more of a consolidation slash breather, slowdown of buying after the one-way rally that we experienced. By the way, we are on the third consecutive weekly move so far. So there are no signs of worry for the underlying uptrend. It's just that it will take off a little bit of momentum. So if it takes off, how much can it take off? Now, psychological 18K mark was beautifully taken care of. There was a little bit of small few bars of consolidation at 18K, but after that we had a pretty good move. So even if it corrects a little bit further from here on, 18,146 is where we closed today. Let's take away 100, 150 points. 18K, I think the market will not complain. The uptrend, the bullish side of the market, the bulls will not complain even if it comes down and teases the 18K mark. But I think if it falls beyond that and closes below 17,800, this is where it was important. If you remember, I think we discussed last time I had the discussion on 20th of April. What's wrong? 20th of October. So 17,800 for me will be where the mood of the market gets a little bit sour. But 18K is the short-term support that the market should look for. So the view stays positive, the strategy should be bullish, and we should be looking to buy more on dips. The problem is not over here. The problem, if it corrects more than 150 points, if we see a surprise correction slash sell-off, I think the problem can come from the BankNifty. Now, BankNifty, after today's close, has confirmed what I call as a contrarian hook short setup. These kind of setups shape up to give us a contrarian trade. The probability of a move is high, but the size of the move may be small, cannot be predicted. what I can see over here is a double divergence with the RSI indicator and the short-term momentum coming off. There is no dearth of momentum from the longer time frames. The index close to that 42k mark is at its previous swing high. And so I think that if Bank Nifty slips below today's low, then we might get a little bit of corrective move from this particular index towards 4100 or maybe towards that 4600 kind of level. Maybe. So this kind of a corrective move is possible. The 75-minute time frame is clearly reflective of this drop in momentum. It's very, very clear on the 75-minute time frame. And so if any kind of weakness comes, I think it can be from the Bank Nifty. Now, if it's Bank Nifty, then is there any stock, any particular stock which looks really weak that we can look to short? Now, I did take a look at the Bank Nifty stocks over here. Most of them are in an uptrend. Almost all of them are in an uptrend, barring the Bandhan banks of the world, which is in a decisive downtrend and completely broken down. And I think there's one more. The one more, which happens to be a pretty decent sized private sector bank, is IndusInd Bank. Now, I was taking a look at the market cap, etc. of IndusInd Bank thanks to screener.com, wherein an 88,000 crore market cap is, I think, the 5th largest private sector bank in the country right now. So it's not a small bank. It's a decently sized bank, okay types. A lot of cons I can see here, but these are all fundamental company related information. And if we bring our attention to the charts and price related information, then this is the only private sector bank in the top 5, within the top 5, which has number 1 moved into a downtrend. Number 2 is at a make or break level, decisive level. And if it breaks down, if it opens up below this today's low kind of levels, that is, if it breaks below this, one can use some kind of a protected stop loss above that. Then this guy can open up further on the downside towards 1100 and maybe 1080, 1050. I'm not extremely bearish, like probably if you look at Bandhan Bank and all, because IndusInd Bank on the weekly charts is pretty well poised and it looks like the stock is going through a multi-legged correction after a pretty good bounce back. So the weekly charts are pretty fine, and any kind of a medium term to long term speculator would look for such opportunities to buy into IndusInd Bank, which I completely agree. But it's just that whether we will get this breakdown of this congestion that we are experiencing here. Now, if you notice, this is the cash market chart. The volumes have dried off significantly within this consolidation. Post the consolidation, thanks to the earnings behind us, we had a corrective mode. So correction with decent volumes, consolidation with complete drop of volumes, these are typical signs of continuation patterns, which mean that it should ideally, prices are suggesting that ideally it should continue further on the downside. So I'm keeping an eye on this guy. If in fact, if you ask me, if within the banking pocket, IndusInd Bank and the index per se, Bank Nifty, both of them, for any kind of short-term weakness, please keep this in mind. Both these discussions are completely primarily from the point of view of short-term correction, maybe lasting for a day or two at max. But the overall market is strong, is resilient, and if the banks come off a little bit, I think that the other pockets of the market, like we saw in metals or the IT, can definitely support the overall Nifty 50 index, right? Okay, so that's it from my side. I hope you've been trading well and taking care of yourself. So till then, let's see how the market plays out tomorrow. Trade well and trade wise.